All right. Good evening, everyone. I'm glad to be here today. So we are live from the SIBO right now, and it's very exciting. Check out my view. I think you might see one or two people still here, kind of hanging around there in the background. So I'm going to try to liven things up a little bit more for you today, and we are going to talk about trading market pivots and mastering how to trade these market pivots. So I know a lot of you guys are trend traders and you like to trade like in the direction of the trend, but inevitably you're going to come to a point where the market is simply exhausted. And you might be at an area where you think, okay, what do I do now? I don't really want to continue to go long here or vice versa, short here. But at the same time, I don't know yet if I can really reverse this trend. So what I'm going to talk about today are how one of my specific, actually my favorite pattern for trading market reversals. And I'm going to show you a couple of examples right here where, I've called market pauses and reversals here over the summer, late spring, going into the summer, these major highs. And we're going to look at some of the things that these had in common, particularly the one from May, and then again heading into the end of July. So these were some calls that I made on Twitter, and we're just going to look more detail into ways that trends can correct and how you can capitalize on these corrections. So trends correct in two ways. You've got over time where you're falling into like a trading range, sideways type of move, and you also have through price where you'll get like those stronger pullbacks and the stronger corrections. And usually it's momentum that determines the dominant route for which way this trend is going to correct. So let's talk about that for a moment. Momentum is just the primary pace at which a trend is unfolding. So as momentum begins to shift, let me grab my pen here, highlighter. You'll have like slower pullbacks and corrections, which will lead to some stronger continuations. But as your uptrend begins to shift, that's where you can start to see these pivot trades begin to unfold. So the specific pattern that we're going to look at today is one that I call a momentum reversal. So it is probably the strongest market pivot strategy that I trade because it's one of those strategies where I have like a batting average over 90% on these where I'm looking for 2-to-1 my risk compared, or sorry, my reward compared to my risk. And a lot of times you can get substantially more than that, just depending upon where the strategy is unfolding in the larger trend. So we go and look at, let me change slides here. We go and look at how this momentum reversal unfolds. And first of all, it will start with a correction through time, meaning we will continue to see a strong trend unfold, but then the momentum of that trend begins to gradually change pace. So we'll have that initial rally if we're, on the long side, and then we'll start to see that momentum begin to slow, just like I showed you guys on the slide just a minute ago. And then the correction will ramp up through price after a third high takes place within this momentum shift itself. So that will lead to the stronger reversal or stronger correction. Now, one example of this was that reversal that took place back in May. And actually, it wasn't so much a reversal as it was a correction on the daily time frame. So what caught my eye on this was that we had that strong momentum move on the upside, that impulse move here. You can see it down here on the daily, and then you can see it played out here again. And then we had these two corrections. 1 and 2 that led to 3 unique highs. So 1, 2, and 3. And because of this, this made it very likely that we would see some sort of pullback or correction take place the next day. Now, there's other details that go into this momentum reversal, obviously. This is just kind of touching on the very basic idea, basic concept. So let's go look at another example quick of how this played out. So here's what it looks like on the daily time frame. And then we had that other example back in July, where it was essentially the same type of strategy. We had that initial push to highs here. We had a first high, second high, and then a third high, and then a correction. This one happened to get going a little bit farther because it had this avalanche strategy. You could call it an inverse cup with handle, whatever. This first continuation on the downside within a new trend, I call it an avalanche. So within this pattern, we had that move continue. Now, let's actually go into the details on this strategy. So we saw a couple of areas where this played out in the past, and I've given some classes that go into those specific corrections in a lot more detail. But let's look at the pattern itself and what led me to look at those corrections in the first place. Now, a lot of times these will be helped out with news. For whatever reason, you know, that pause going up into some of these moves will have a news event the next day that starts to kind of drive it even further. I don't know if that's like coincidental or whatnot, but it seems to be the case that that happens a lot. I think it's just because the market is starting to get more hesitant and you're already starting to see people be a little bit more cautious on the long side. So when we look at this strategy and look at it from the point of view as a reversal strategy off of highs, these are the things that you guys need to take note of. So with a momentum reversal, what I'm looking for is basically think of this pattern like a leg. So you will have your leg here. In this case, we're apparently laying on the ground and holding our leg up in the air, but that's the idea that you want to go for. And midway, you're going to have a kneecap forming most of the time. So you're going to have some sort of pause that might only be a bar or two on whatever time frame it is that you're looking at. And this strategy really does form on any time frame and any market. So it doesn't matter if you're a stock trader, a futures trader, Forex, bonds, gold, whatever. You're still going to find this strategy unfolding on multiple time frames, tick charts, daily charts, weekly charts, monthly charts. And we will look at examples here today on all of these different time frames. So you can really see how once you master this strategy, it can apply to so many levels. You know, whether you're an options trader and you're looking to understand, you know, how much time it's going to take to reach certain target levels, we are going to discuss that today. So once we have this leg form, now we need to find the foot. And within that foot, right here, this is where we want to look for distinct pivot points. Now, in the most ideal momentum reversal strategy, you're going to see a series of V's and inverted V's. So momentum as a whole on these smaller little moves isn't really showing a shift. It's the shift in the entire foot compared to the leg that matters in this strategy. And sometimes you'll see momentum slowing as it's going into the third high, but that's not necessary for this to work really well. Now, if you do have a situation, though, where your corrections between the moves are slower and it's not quite a V, then that could be a little bit of a heads up that you might be getting into a riskier situation where the target levels you might be going for might not hit on as larger time frames, or it could be having a formation where it's going up, it has that leg, has this back and forth, and it treats this almost like it's a bull flag. and it ends up breaking and continuing the trend. This usually happens if it is the first little pause in a new uptrend, meaning you've had a lot of downside happening before that takes place. If, however, this whole thing is happening after you've already had several of these larger impulse moves on the upside, then you've got a very strong reversal pattern starting to unfold. Now, what I love about this strategy is that this is one of those that you can get in very close to absolute highs if you're trading a reversal off of the high. To do that, you need to see pretty much a measured move between the highs of 1 and 2 and 2 and 3. So it might be 30 minutes each if you're looking at like a 5-minute time frame, or it could be 20 days each if you're looking at a daily time frame. The thing is, you want them to be very close. Now, they might be off by like a bar or a couple of bars, but the general idea is that you want these V patterns and you want the spacing to be very similar between the highs. Also ideal is to have this form a parallelogram, meaning that when you're connecting your highs here, like that, and then you're connecting the lows in between these valleys, you have a parallelogram that is formed. Now, that's not a very good parallelogram I'm drawing over here, but that's the general idea. And if you have that forming as opposed to like a wedge where you're seeing the range narrow, you have a better chance of a really strong reversal. Now, with a wedge, you can still get some of these initial target levels hitting. It just becomes more difficult to break through where that wedge sort of begins to form and begin to shape. Now, as we look for this as a pattern unfolding, the entry is to take this channel break here as it goes up into that third high. And when that channel breaks, you can short it. So you're looking at a short really close to the absolute high, and your stop is on the other side of it. Now, I hear a lot of traders say use a bracket order. The problem is when you're so close to a level like that, you have a good chance of it kind of whipping and taking you out. So I'll usually put a stop on the books that's, a lot higher. They'll just protect me in case of anything crazy, but I'll try to manage it manually instead. Now, there are alternate entries in case you miss that. A lot of people will think, okay, well, I will use that channel break then as my entry, the lower channel of the parallelogram. The problem with that is that you're also usually coming into a price support level right from the channel that's coming off of that second high. So as it comes into that level, you might see it puncture that lower trading channel, but then just kind of bounce right back up, or pause there, or whatever, some sort of reaction off of that level. So trading that absolute channel break there is a lot trickier, and there's a lot fewer times that I would be willing to do that. Sure, there's going to be exceptions where it can bust right through that pretty quickly, but in general, I want to see some sort of other pause or bounce. For example, I'd be perfectly willing to short a bounce back up into this zone here, especially if I get two waves. So if it bounces once, does a second bounce, then I'm looking to short going into that second bounce. Here we have a little bit of a slower version on the template where it creates this nice little two-wave continuation, so you can take that as your entry trigger as well, and you can tighten up your stop on that one. And if you're in it earlier, you can also, as this breaks lower, you can also tighten up your stop as well. So it might be something where you build into a position. If you're looking at like a strategy that's unfolding on the larger time frame, you might be able to build into it that way. Now, as this progresses, the reason that this is my favorite pivot strategy is because even if you're just looking at like the very minimal target levels, I mean, usually at that point, you're still dealing with about a 2-to-1 return on your risk. And that's kind of like the minimum. I mean, now if you're trading like the SPOOs, You might not have that happen. If it's like the SPOOS intraday, it might not give you that on like a 5-minute time frame. But when you're going up on larger time frames and you're dealing with something where you've got your back and forth swings with a lot more price action, it's very easy to get 2 to 1 just with this first pull off that third high alone. Now, typically, I'm looking for what I have marked here as target level 1, and that is that first low following the first high. So I don't usually go for that exact pivot low. Rather, I go for where that channel breaks. So when that breaks on the upside, that's going to be my entry zone. So from that point, depending on where this takes place in the larger trend, it might lead to even farther target levels. The kneecap is going to be the next target zone. And then, where it comes out of this previous correction, that's going to be that third target level. So when you're coming off of absolute highs in a lot of these securities, especially on daily time frames, if you see this strategy forming on a 30-minute chart, it's really easy to get this third target level and sometimes even further if you're willing to hold out through a longer period of a correction. Now, the same strategy can also happen off of lows. Basically, you're just inverting everything. But let's look at how this unfolds on an actual chart. So here's one example of where we have it on the Danish krone, and it's a very clear-cut pattern. We have the leg to the downside, the kneecap, and another move down. And this example, you guys, is from 2013. And the reason I'm bringing it up now is because I really want to show you that when I'm teaching you technical analysis and my style of market analysis in particular, nothing has changed over the years. So the same strategies that I've used over the last 20 years of trading are the same ones that I apply now. So when we look at this strategy here, you can see here's the V's and the inverse V's. Here's that move off of the third low. So technically you could get into it at this level, but it also had a nice little Phoenix pause to offer a continuation move really early on. And so this was a trade that we had way back then. And this was kind of how we saw that unfold, where you can see if you took that channel break from the parallelogram, you would have gotten in it right when it pulled back into this congestion. Now, like I said earlier, when that happens, that can be a great point to, once you're familiar with the strategy, you can use that to pick up the trade if you missed like the initial triggers coming off of the third low. Otherwise, you want to wait for something like that two-wave correction, very similar to what I showed you on the template, and that's going to offer that better entry. This one, of course, went all the way to target 3. Whoops, somehow I have target 2 mentioned or missed target 2 and wrote target 4. But anyways, this is target 3 up here. It went all the way to that level. Now, here is one from over the summer where I taught another class on trading pivots. And we ended this class with the question, okay, so what do you think is going to happen on the Kiwi here? This is our New Zealand dollar, and this is what was forming as at that very time. So I like to do classes where I take things that I've talked about in previous classes and then we expand upon them the next time I do something, whether it's, the same topic or a different topic. That one we were talking more about the overall market. But, same strategy was unfolding as we were wrapping up that class. So it was exactly what that momentum reversal is, where we had those 3 lows, very comparable time difference between each of those 3 lows, and then the reversal off of the lows. Now, looking at the entry trigger on that, obviously, it went pretty quickly there, right away, coming off of that third low, but it offered a couple of continuation options. Now, you would have had to have dropped down to smaller time frames to see the action a little bit clearer, but I still want to show you what these look like. Now, the difference here between this and what I showed you as the core template is that this was in a stronger uptrend already. So what happened here is that we had a pullback coming off of a high. So this is a bit of a counter trend type of move. Usually what I want to see is if there's an uptrend in place, I want this momentum reversal to be forming at the highs because then it's showing even larger exhaustion. Now, if you have an uptrend in play already, and instead this pattern is forming on a correction that is taking place within that uptrend, then you might have a situation where you have to go for closer target levels because it could just form like a two-wave kind of corrective move off of that and then attempt to continue lower after that point. If I show you the next chart here, you can see that in a little bit more detail. So here's that two-wave there, and then you can see how it pulled lower. So it still hit that target that, you know, I prefer to go to, which is right where the momentum shifts. That's like the minimum target zone I look for. It also went and came into like the pause zone for that kneecap level as well. Moving forward, a more recent one I've talked about a lot lately is the dollar yen. This had a pattern that was forming in August, but what you'll notice here is that with these three lows, there's not a clear shift in momentum like we saw in the other trades, where this leg is still pretty comparable momentum compared to the downside move into that second and the third low. What's more is that there is a slowdown. We don't have that V back and forth within those moves between like 2 and 3. And so what happens is the range widens up and it creates another momentum reversal within this smaller one. So the first one hits this zone right here from the parallelogram, that target level 0 that I mentioned. And then it tries to go and put in another 3 lows. What I want to show you about this, though, is that it's not exactly like the 3 lows in the template. Because when we come into the second low, we actually have 2 lows that form. So here's a low here, and here's a low here. But because the low in between is lower than this first high and lower than the second high, I divide between these 2 lows and create that pivot in the middle. So you have a U type of formation or a W, however you want to look at that. So your actual second low is that midway point right between those 2. So I want you guys to keep in mind the spirit of this pattern, even when the actual like kind of you know, the core might look a little bit different. The spirit of the strategy is still there. So, you know, the dollar yen followed through very well. We're seeing it hit some of these core resistance levels, hit that first target level there at A, and then it went and hit B is where the channel was starting to shift the first time. So it hit that level also. If we go forward, let's look now at EXPE. This is something that we were looking at here at the CBOE the last couple of days. I'm here with Bob Lang. Say hi, Bob. Hi there, everybody. So he's here at the CBOE with me, and we were looking at this momentum shift as it is coming into the support level here. And this is another one of those variations where we look at the essence of the trade, because in this case we have almost an M formation between the highs and again over here. So we still have that concept of this momentum reversal strategy. Again, this one's coming off of an uptrend though. So you go for those shorter, closer target levels. And in this case, again, it's had one move up and it's in the middle of attempting that second move up, going for that target level where that momentum began to first shift. So I love showing you guys kind of what's happening right now as well, but let's go even farther and look at some things that are forming in the market today. And Apple on the monthly time frame, everybody wants to look at Apple. If you were to look at Apple and think of it in terms of that momentum reversal strategy, think about this for a second. What would you be expecting now from Apple as we're going into the months ahead? You know, just think. So we have this up push here, and now we have these three highs. Measured pacing between the highs, pretty decent V, and momentum is even starting to shift as we're dealing with this third high. Now, we don't have as strong of a leg as we've seen, in like the core strategy, and we don't have like the clear-cut kneecap. We have instead, a couple levels of pause here back in 2009 to 2012. But the essence of that strategy is still there. Of course, this is going to be the first sort of pause that's kind of in this new uptrend, since there's not, much going on back down here. So it is a situation where, with just a slight shift in momentum where it's a little more gradual here, we might see it just offer like a two-wave, maybe hold out a little bit longer. But at any rate, there's some really good resistance in here. So, as we're going ahead and you're thinking of what type of trades are we going to have coming up in Apple, think about that. And there's a lot of other ways this can play out. We got Tesla. Would you buy this or would you not buy this? It's not as pretty as that core pattern that I showed you guys earlier. So even though I've taught you guys the basics of how to trade this momentum reversal, there's still a lot more to learn. And when I talk about my system of market analysis, I'm looking at building blocks of price development, where we're looking at things like momentum, we're looking at volume, I'm looking at trend development. All of these things are going to help me determine not just what the strategy is. So you're going to find like core strategies exactly like the template that I gave you, but you're going to be able to trade a lot of variations of those as well once you understand what goes into the price development. So if we look at, the NASDAQ now, what's happening here in the NASDAQ? We have these three highs. It's not exactly that template though. Do you know what's going to happen next? Well, if you want to learn more about my type of market analysis and how to delve even further into strategies like this momentum reversal, then I urge you to go and check out my market timing bootcamp that I have coming up. And it's kicking off on October 11th. It is a live mentoring program where it's not just me sitting back and teaching you strategies, but you actually have to be involved in what's going on. So there'll be a lot of back and forth. It's based upon my one-on-one mentoring that I do, but it's going to be over 6 weeks. We are going to be using live market action to teach you how to read these technical tools for price development, and not only how to use them to identify strategies and patterns, but also how to tweak them to suit your own market personality. So I'd love for you guys to go over and check out tonihansen.com/bootcamp. And it is right now only $197 for 6 weeks. We kick off at 10 a.m. sharp every Wednesday for 6 weeks. It'll be about 90 minutes or so, just depending on how many questions and whatnot that we have. And we will go into more of the details of what goes into some of these trickier types of market development, because we are going to be watching the market live as it is unfolding. So I hope that you can join me here coming up on October 11th, and I want to thank you for having me here today. It was very exciting to get to trade here from the CBOE. A little slow right now, but had a wonderful couple of days here in Chicago, and I'm heading back tonight, but I hope to see you guys back in another week or so. So take care, everyone, and thank you again for having me.